For more on China's trade, we're joined by Dan McClory. He's president and head of China for Bowstead and Company. All right, Dan, good to see you as always.
Same here, Michelle. Good to see you.
Dan, as we know, China is a crucial driver of the worldwide economy. Now, exports were up 2.9% year over year in yuan, but the figures are slightly better in the local currency because the yuan is weaker and we had the dollar strengthen recently. So in dollar terms, this was a 4.4% drop. Does this drop in exports indicate that world demand is weakening and that global growth is slowing down?
I think it does. There's really no way to avoid it, and I'm glad you gave the dollar-denominated figure because that's really more telling in terms of the effect of this slowdown on the global economy. But of course, exports are reflective of the global economy not expanding, so China doesn't have as many willing trading partners to sell to.
Well, Dan, there's been a lot of concern and trepidation, a lot of uncertainty, particularly surrounding the Brexit. How much of an impact does the Brexit vote have on this?
I think in the most recent statistics, it would show that it's somewhat negligible. In fact, the European Union, which is China's largest trading partner, had increased activity, almost a 2% increase year over year. So that clearly wasn't borne out in the statistics yet, if it ever is to be. The ASEAN economies and, of course, the U.S. both experienced declines. But the EU so far is not showing any type of measurable effect based on Brexit in terms of its trading patterns with China. I think you could also say that all the work that China has invested in cultivating relationships throughout the EU, not just trying to negotiate unilaterally in Brussels, but going country by country in a very stepwise approach, is actually bearing fruit.
Well, still too soon, to your point, to see what impact the Brexit may have, but do you anticipate it taking a knock-on effect?
I don't think so. I think the Brexit gloom and doom has been greatly exaggerated. There clearly will be some corrections, but you know, Michelle, what this all brings to mind to me is think about when we've talked over statistics and trends going back a year ago. Think about the massive impact on markets when the Chinese stock markets were in rapid decline. This is very, very pedestrian. This is very, very stable compared to some of the things that were going on just a year ago. So I think these most recent statistics are nothing to be alarmed about.
Certainly a tremendous signs of stability compared to the crash that we saw last year, to your point, though. Now, Dan, we do expect exports to go down as China rebalances to a consumer-driven economy, but imports were even worse. They were down by 12.5% year over year. That was in dollar terms. In yuan, it was a 5.7% drop. What does that tell us about domestic demand?
Well, I think two things. You know, one is, of course, when you look at exchange rates and the devaluation of the yuan. I mean, when you're looking at what's occurring there, you've got the much more expensive to bring in items in U.S. dollar terms. So that's one thing to keep in mind. But I think what we might be overlooking here, Michelle, is there are some domestic industries that are in China that are starting to become real leaders. I'm talking about areas like electric vehicles, about drones, certainly smartphones. You could go into even areas like data mining. So I think you're going to start to see the emergence of some technologically advanced industries within China that are going to give rise to that internal consumption, and they're not going to have to import as much.
Dan, certainly a lot of bright spots on the horizon, but given the fact that consumer demand was down and that imports were down, do you expect the People's Bank of China to take any action in light of this? Do you expect any new stimulus measures to be implemented?
I think there will definitely be continued government intervention, if not assistance, in the economy. There's absolutely no question of that. If only to counteract some of the measures that will affect the Chinese economy from outside, such as, you know, whatever the Fed may decide to do here in the U.S. So I think we should expect more involvement. Certainly not as dramatic as we saw last summer, but more involvement from the government to continue to help to stabilize what's going on in this adjustment of the economy in China.
Dan, some are expecting China to take some moves to weaken the yuan. Do you anticipate any action to be taken regarding the yuan?
I don't. No, not at all. I really don't. I mean, I think it's moved probably within an acceptable range. And of course, being part of the basket of securities, China has, much greater visibility, accountability, some would say responsibility to the global economy. So I don't anticipate that at all.
Dan, you mentioned the Fed earlier. China's growth slowdown was one of the top issues affecting the Fed, but in the last couple of statements, they haven't even mentioned it. It's really taken a bit of a back seat in terms of global concerns. Does this data now put China higher up on the list of concerns?
I don't think so. You were absolutely correct, Michelle, to point out that the world is confronted with all kinds of uncertainty. I mean, put China off to the side in these moderately, lowered statistics that we're talking about today. I mean, you're looking at everything from, nationalism to a big election in the U.S. To terrorism, to all different kinds of situations that are impacting on this. But I really don't think that this slight adjustment that we've seen in China's growth, I think it's been somewhat priced in and factored in would be a good way to address that.
All right, thanks. As always, we're going to have to leave it there. Dan McClory, President and Head of China for Bowstead and Company.
If you like what you just saw, follow us on social media and visit our website, cctv-america.com.